Michelle, what are you expecting for the jobs number tomorrow and the wage number?
Yeah, I think it's actually going to be a pretty good jobs report. We're looking for 215,000 for non-farm payrolls, and that's consistent with what we saw from the ADP survey this morning, which was robust. And even the ISM survey, it was a weak headline. A lot of the components within that report were weak. But the employment measure within the ISM survey actually held up pretty well. So I think tomorrow's jobs report is going to be just fine on the headline. And in terms of wages, the year-over-year rate is likely to slip a little bit lower to 2.9% because of difficult base effects from this time last year. But nonetheless, in general, pointing to an environment where the labor market is tight and wage inflation is heading higher. I think the question will be how much investors care. Will they see the jobs numbers as more of a lagging indicator and focusing more on some of these early indicators that could tell us about what's to come going forward?
All right, that's a good question for you, Scott Wren. What's going to be more important, the jobs report tomorrow or the ISM that we got today, which was pretty disappointing?
Well, for us, really, Michelle mentioned the initial jobless claims number. Sarah did as well. And really, you look at that number, and anything below 280 is a pretty darn good number. And now, granted, we've been at multi-decade lows until very recently, and a little bit of pop-up in that number we don't think is that big of a deal. And then tomorrow, certainly we're going to see a decent headline number for non-farm payrolls. And what we've been watching really is that wage number, that average hourly wage number. And if it does back a little bit off of 3.1, you know, the market would probably like that, because one thing we haven't had, at least at this point, which you typically would this late in a cycle, is really a margin squeeze. I mean, operating margins this year, next year, they should be very good. We haven't seen that big surge in wages. So for us, that ISM number, I mean, 54 and change, that's a good number. Now, was it below expectations? Certainly it was. But that's not indicative of any kind of, nightmare economics scenario right around the corner.
Michelle, even though the numbers domestically continue to hold up okay, can we ignore what the implied message of the bond market here? I mean, what is the bond market fixated on right now in the way of growth expectations that is not yet in the data?
I don't think we could ignore it. Markets have information, and we're supposed to take some signal from it. And clearly, the moves in the market have been dramatic. And the way I think about the linkages is market moves are the first step. The next step would be the survey data or the soft economic data showing some weakness. And then in turn, it ends up showing up in the hard economic data. And the longer we have this market strain, the more likely it is that negative feedback loop does kick in. We're still in early stages of that. We're first seeing the evidence of weakness in the survey data. We're not yet seeing the weakness in the hard economic data. So I think we have to be a little bit careful in terms of reading too much into what markets are saying. We know that they can flip around very quickly if some of the risk factors die down. But at this point, we're supposed to remain cautious and take all information, whether it's coming from markets, from surveys, or from the actual economic data, into consideration.
Very, very quickly, Michelle, if we were to see a turn or slowdown in the U.S. economy, how long then would it take for jobs to catch up? Because jobs are late, right?
Yeah, they are. They do tend to be late. So I think it'll be several months before you start to see anything significant in terms of weakening the labor market. The first thing to look for would be just a slowdown in the pace of hiring. So, going from the 200,000 pace, something close to 150 or a little bit below. But the real challenge will come is if firing shows up, and that would be initial jobless claims ticking up. So keep a close eye on those measures.